you please? Could you please? Could you please? Could you please say the now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Fire, take my hand, I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and let's not waste a second more of your time as we go into the charts. Bada bing, bada boom, we go. So it looks like two 12-hour candles later, and we saw that move to the upside at the curvature of the cloud on the hourly, which we'll get into in a moment, but we were beneath this 0.5 level of the upwards path of the diagonal pitch fan to the upside. So we dipped in underneath this 0.5 yet again and bounced off of that one level of the bearish trend-based fib extension tool. So let's go into the high block capital liquidity chart. What is the liquidity chart? Well, it's when people lock their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss. So we get to see where that liquidity lies and see where it gets burnt to a crisp. So let's go into that 1 minute time frame. And yesterday we were pointing out how these pools above were looking juicy, and we had some 50x short pools up here at 27.53, which we have come back for. Did we come back exactly to that T? Where did we come back exactly? Yes, we did. So we came back to a T to that, sorry, it is not 29 million. It is a $186 million pool of 50x shorts. You'll be lost but not forgotten, my friends.
Fatality.
Yes, and they got gobbled to a crisp, as the market maker likes to do, and came up to that pool stacked above. As we talked, the noodles were looking stacked above, and they came to those noodles. And these 100x characters, which also opened, so these 100x longs that opened up here at $157 million pool, they just immediately came back and said nope to those guys. Do they come lower to get this $157 million pool of 50x down below? There's still a hefty amount up above here on this 1 minute time frame, which is 6 days of data. We're about to lose this pool to father time at 161 million at 27.71, and we have more up at 28 even, and there was a lot more up here over the last few weeks, which we have lost to time as well, which is convenient because if we expand our vision to the higher time frame, we can see these external pools and where they've gotten locked in. So as you see here on the higher time frame pool of the 7-day, we have $6 billion up here at 27.8, $4 billion at 27.850, and you got an imbalance still to the upside here on this time frame. If we also start to expand our vision to the 1 month, you will also see that continue to be apparent to the upside. Shout out to everyone here. Yo, 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 dingo in the house. Thank you for coming on in and spending your time like chilling out with me. Like, let's go over the liquidity together. I just got off of work, rode my bike home. I feel good. Gonna go into the NASDAQ, try to pass these last 3 accounts. So yes, on the 1 month time frame, you also have a large pool of 20 billion up at 27.8 as well. The last few weeks have been kind to the shorts, so it looks like they might punish them for a little bit and come up to these regions. So this 27.8 region looks juicy and highly likely to be grabbed based off of this imbalance on the monthly time frame. And how high do you go is the question. Do we go all the way up to 28 and beyond? There is still an imbalance up here at 30K of 45 billion or so on the monthly time frame. You see this range getting thick. It was previously 12 billion. Now it is 17 billion. So another 5 billion has been induced into the charts, as well as up at 32K. You got 32K players thinking they're safe from the purview of the market maker. They are not. So there is 19 billion that has been induced up here at 32K, which is also going to appear on the higher time frames as we start to shift our vision and expand it to the upside as we go deeper into the liquidity. This is that point in the track where it starts to get like, oh yeah, we're into the liquidity now. So if we go, oh, that's zooming in a bit much. If you go into the 3 month time frame, we do have that $150 billion still chilling down at 25K, saying, what's up? Are you going to come get me or not? So are they going to go up to go down? Is it going to be a brief rise to get this 27 billion at 27.8, or is it going to continue higher beyond this range? You have that 28 billion at 27.8 just beckoning to come take it, and even more at 23 billion at 28.4. So how far do you go up before you fatigue? If you fatigue at all is the question here. Are we going to see some more upside to take out these range high liquidity zones? And yeah, you still have that beck and call down to the downside of 150 billion, which is why we have this trend-based bearish fib extension level up for the last few weeks since April 26th or so. So this pool that has yet to be reclaimed could be the only one that was reclaimed. They could have spawned enough divergence. As we said before, the market maker does have hard to read intentions that sometimes leave liquidity on the table to a story we don't know. Heck, it might even be their pocketbooks that they are putting down there that they don't want to touch. So the one thing that we went over on this daily candle close with this buyback wick is the objective bullish scenario of that wick. So when you have the wick, when you do a fib retracement idea to this wick to wick level, if this will let me go here, and the go back to the basic. So if the body of the candle falls within the 382 region of the wick to wick retracement in the area of in the direction of momentum when you pull the fib, so in this case we're pulling it to the upside because that's where it closed, it falls within the 382, and that is objectively bullish even though it is a red candle. So that's why we've been seeing this daily time frame play out. Are we going to see this W be a shallow W to the upside and not a extended W? Did they commit the shorts enough to get them to keep in their shorts so they can take their shorts is the question. So let's go back to the pocket thing here and delete that and go back to the 3-month time frame as we expand our vision to the upside and go to the 6-month. It's kind of a ritual. I'm doing this alongside you as I finish my work. I haven't done any of this. None of this is scripted. I'm just figuring it out alongside you. It's kind of unchanged in these pools, although they do get thicker over the days, so you can kind of see how these thicken up. And this 22.5 turned to 100 billion, for example, previously from 76 and even 50 over here. So there's a good double up on the liquidity at 22.5 from April 2nd. So from April to May, end of May, we've seen a double up of liquidity at 22.5, which is scary to note on this caked up path to the downside. So are we seeing the end of the bull market at some stage, or is there going to be a surge up to come pierce this at some point? On the 6-month time frame, it suggests so, even though there is double digits of liquidity up above as well. If we go to the yearly, that's where it starts to get ambiguous, because you start to see these pools which have been around for a year that are saying, hey, what's up? We're about to lose this range from June. So if we lose this in the next 2 weeks or so, we're going to have only these down candles to deal with in terms of this liquidity pool, which is sad. Either way, we have $127 billion at 32.4, so there's nowhere near as much down here. You do see 106 at 23.6, and you see 114 at 24.4, 107 at 24.8, 83 at 25.2. These are billions of dollars, by the way. And yeah, you're seeing $100 billion in that entire path down to 22.4 as well, at 120 billion down there. But the path to the upside also has that same amount starting to form, not nearly in the same fervor, so they could let it percolate some more as they go up to go down, perhaps. So let's go back to the monthly time frame where we're starting to see that target of the 27 billion, was it, up at 27.8. And then we would go into the Binance chart and check it out with our oscillators before we get ready for Nasty Naz Tuesday. So it looks like, yeah, they're going to come up most likely to 27.8 to this $19 billion and try to spawn some divergence off this, and then you can see whether this fatigue or the bullishness is still strong or not. So are we going to see this push up to that? It looks like it may be likely on this time frame, if nothing else, to stop out the shorts before continuing lower. You are seeing this narrative path being paved to the upside as it stands currently, so I don't see why we can't continue that path on this time frame. So let's go out of here. If we break the 786, the next region would be 27.622, which would be the top of the range there, which is also the 706. The 706 is the trap door to the downside as well. If you fail that 706, then you can expect a plummeting back down into this region here. This is why we use the trend-based fib extension levels and the levels we chose to represent. They tend to be regions we come back to for consolidation. Okay, so time to go into the Binance chart and go into our oscillators here. Let's turn them on, turn on our heads up display, bada boom, and here we go. What are our oscillators? This is Momentum Master, link in the description, momentummaster.info for more. You can scroll down to the features tab and see everything instantiated, or looking at particular components as we go over them. So we're going to go over first the trend cloud and what we were talking about yesterday as we left you about the hourly. So just a reminder of what we were going over yesterday. Yesterday we had seen, yesterday was Monday, so we were about here, right? So we were talking about a potential rise up of the hourly and seeing how the hourly fends for itself. So the hourly, meaning the hourly time frame, was getting overbought around this time, and then we were saying you're going to surge up and then possibly fade out, and if you fade you could look for a bounce off the 618, or we said if you bounce off the 618 you're most likely going to thin the cloud around this region, and we called that thinning almost perfectly. And then we said you'd probably be coming to the upside based off of the 4-hour time frame. So you were trying to look at and see how the hourly was going to reset. So the reset happened not within the 618 region, but actually held the cloud here quite nicely, and then you got that bounce potential just a few hours after my circle at that thinning cloud, almost perfectly. And so that's kind of how Momentum Master works. If you have Momentum Master, you don't need a guru, you don't need me necessarily. I'm just here to show you what the components do and where you could potentially look for these ideas to occur, because I've just back tested and seen it a million times. How did I know this curve was going to come up in this manner? Well, that's just what happens over and over again. So I just see this curve happening here, and it implies that it's going to happen like this. So you can almost intuit or preempt the momentum coming into the upside here. So that's why we didn't put a projection to the downside. We had the arrow pointing up, and it played out to a T. And it's not me, it's just the components of Momentum Master, and you're starting to see a cross-up event. But when you see this cross-down event in this manner with this type of angle, it's kind of still bullish. I would wait for 3 hits to the high if you were going to short. This is definitely not the point to short at. Some people just are so eager to enter a short after a move. You'd want to see like 3 hits. This is the power of threes. You can Google it for more information. The power of threes is pivotal to seeing when to enter things. You got 1, 2, and 3, and then to the downside. So the first time you'd enter here, you would have been squeezed. If you're here, like, it's unsure, is it going to continue higher or not? So you wait for that third kind of fatigue point, and then you take the short idea. So that's just the smart move every time. So here you have 1, 2, and 3 to the downside. And sometimes even the second one will have you with that M pattern, and it's just Wendy's and McDonald's for days. So you got your McDonald's and you got your Wendy's. So So you got Wendy's versus McDonald's for days, and that's all there is. So it looks like as we stand right here on the hourly time frame, we are reclaiming the adaptive moving average. If we reclaim it and hold it, we can see a surge up further beyond into other pools. This fair value gap that we had here laid out for you nicely was recovered, so we can delete that. Now there is a fair value gap here and here, which we had laid out as well, and the pools that we've lost to Father Time, which are most likely still open up here if we continue higher. So let's go to that. We can delete this angle now too, because it has came to fruition. And the 6-hour cloud that we were kind of ambiguous about, because we had seen this anomaly about the angle kind of made this weird purpley thing. I'm still kind of unsure what that means. It's a new thing for me to see here. Is this going to continue up in a manner or not? So we're still keeping an eye on that. And let's go to let's start our descent from the time frames from the daily on lower. I think the 3-day is coming to a close soon, if I'm not mistaken. In a day and some change. How about the 5-day? 2 days and some change. So we still got time to go over that. So we won't go over that today. Let's start with the daily. So the daily had the cross up event on the baselines. What are the baselines? Go to the baselines and read about them if you care to check. So these are your first signs of reversal. So we had this baseline pass right here, and we said as long as you hold these baselines, you're still good for an upside path, despite the liquidity lurking below, which we've gone over, the 150 billion of longs chilling there. So I just go by the momentum as well, and it was calling for upside, so I wasn't calling for necessarily stabbing to the shorts just yet, but always keeping a weary eye of that liquidity. As we go to the 22-hour time frame, we're starting to see that 22 time frame curve up here. Are we going to see this see itself to fruition here? You are reaching at some thick cloud resistance, so unless you make an intention to go significantly higher like such, then the kiss to the cloud to continue higher will be null and void if you cannot clear this cloud. So you have to make a clearing of the cloud and then kiss and continue. And even here it was not as thick and we could not maintain it and dropped back down. So if you cannot clear the cloud and maintain it, then the chances of coming back down are high. And even still, with this thickness and us meeting with the resistance at the cloud itself, we would need to see New York step up to the plate and make an intention be known to somewhere up in this region for there to be a true play to the upside. There would need to be a true price shift out of this region for us to have left this region. If not, we can expect to come back down to the bottom of the region, and if not lower into this liquidity. So this is the 22-hour time frame, but I'm talking in general anyway, just looking at this cloud. If we go to the 12-hour time frame, the 12-hour time frame volume was blue, which intends a stopping volume candle. The green one contains 200% of the previous 10 candles. Blue is, I want to say 75% or 175% of the previous 10. It's significantly less than this, which implies stopping volume. It's a whole strategy. You can look into it called PVSRA candles, but it has to do with the volume contained within each candle. Here's, once again, on the 12-hour time frame, we need to see this shift and reclaiming of the cloud for it to be a true move, and reclaiming of this adaptive and weighted moving average. It's not a coincidence that these moving averages do appear at key levels of resistance and liquidity pools. This is your dynamic support and resistance that is put into the algorithms themselves here on Momentum Master Suite. So it has you at hello, even if you don't know support and resistance. It will kind of keep you at that support and resistance level. So here, if you get above this resistance zone, these two resistance zones, you need to battle against in order for this to be a true move to the upside, or it's just going to fall back down, as we said, down into these regions. If we look at the 12-hour time frame, we're doing that double top idea we laid out for you yesterday, where it's starting to make its way to the upside. The Williams is holding true as it makes its steady path to getting overbought, but nothing really momentous entering the scenario just yet. The one thing I was noting in the chat just before this, and also talking in a different Discord about, was Asia and the time frames. We'll get into that as we go lower into the time frames, but Asia generally does not pump it after a certain time. So the fact that they did that large candle at the time they did, to me, in my historical memory files of them doing that, is generally when they intend to make it stick. And London, or if London consolidates, then New York is intending to send it further and complement their move, not negate their move, because Asia rarely pumps it. Asia is known for dumping majority of the time. So when they pump, it generally is met with a double up on another session. So if we look at the 6 hour time frame, we're starting to see the money flow is in a good place with the RSI. There's nothing ambiguous about that. The Williams is opening up in a nice fashion, showing that there could be more upside in store. We're at a high level overbought on the stochastic RSI, but this last little bit could send you to a last spurt of hurrah to the upside while they reset that. So still good on that. As we go to the 4 hour time frame, it looks like you're starting to curve off here on the stochastic RSI, and the Williams also coming up in a nice manner. The MACD, leading MACD, also coming up here. The money flow is beneath the RSI, which is suggesting you got some more money to possibly inject into the scenario and open this up for one last hurrah to the upside on the 4 hour time frame here. If we go to the 1 hour, the 1 hour also curving nicely for that double top scenario. Once again, we already had that double top, so this would be your triple top of that. And if we look into the oscillator itself, are we getting a cross down on the leading MACD? Not just yet. The leading MACD is something that's not listed on the website. It was something I forgot to write about, but basically you can set an alert on that. If you go to the Momentum Master B and add an alert here, you can add an alert on whatever time frame you like for Momentum Master B, and that will be for your leading MACD cross. Now the leading MACD is normalized within a framework of 100 to minus 100, making it extremely sensitive, hence leading. So you can have this say pump or dump. Every time it crosses down, that would be a dump, and every time it crosses up would be a pump. And you can have it notify you indefinitely, which I have it do on the 5 minute to let me know what the direction of the market is last. So when this crosses up, it will tell you like the direction of the market is up, and crosses down, direction of the market is down. It's quite handy, if I do say so myself. So if we go into the 15 minute, this is where we start to talk about the time frames here. 15 minute is gassed, but if you're going to see some pressure here, it looks like you're also fading on the cloud here on the 15 minute, which is suggesting a fatigue of sorts. And you got one, and you're attempting a second hit to the high here, getting 6 time frames overbought. You'd be receiving this dynamic alert to your phone. If you weren't watching the live and you had Momentum Master, you'd be seeing a set and forget alert system that lets you know with details that change automatically. Each point of change will be updated in the text you receive. So you would see the 6 time frames overbought and the values for the stochastic and the RSI at that time. That's one of the cool features that would let you know if you're at that key level, and that's where you want to shoot, take your chance at that time. So Asia. So we were talking about Asia. Normally Asia likes to pump it before they dump it, and then so they normally pump it into Hong Kong, which is about here, and then that's when you look for a short, and then they dump it down if they were intending to take it lower. The fact that they continued this at 11:45 a.m. my time, Tokyo time, and pumped it into lunch like that shows me that they're setting up for a bigger play in one of these 2 sessions. Now, London kind of took profits on something and repositioned, or maybe accumulated something and then distributed and repositioned off that 100x pool we talked about. And then New York, they're waiting for New York to step up to the plate. So does New York just Bart Simpson back down into this region, or did they send it up higher? That is the question on everyone's mind. So if I was staying live with you continually, I would be able to update you on what happens when they start to shift this, because as I update this minute by minute, as I see things change in the price action, you'll see different bubbles appear, and then the bubbles imbalances to one side or the other will make it apparent which side they're looking to trap. Now there's other ways people use this. There's a thing called exocharts, which Jason Kasper's crew uses a lot, but I think this is very similar in the sense that you start to see where these pools are trapped as we go over them and see them come back to them time and time again. We're looking at stuff that's 6 days old, though his is more ultra focused on the moment in time for that sniper entry. So it's a different type of mentality for seeing who's trapped in the moment versus I'm looking at who's trapped over time. And so are we coming down to this imbalance that was opened up here at the 157 million characters down at 2695, or are we going to eat and gobble these higher time frame characters up here at 2771? I'm betting on the upside characters, because if we shift our vision up here as we went over, that there's a large amount up there, just a hop, skip, and a jump away. And if they do intend to go lower, it's better to take out these guys before they do. So you go up to go down, and you go down to go up. So I would be surprised if we don't take out this region and get people bought into a bullish narrative and see how many bulls open up at that time. And they could just take out the shorts and make their decision at that point. As it stands right now, it doesn't look juicy enough for me to consider it to just be a Bart Simpson just yet. Despite the 15-minute looking gassed, and the cloud is starting to shift and thin out a little bit. So you're starting to see this cross up though on the baseline. So as long as you hold this baselines on the 15-minute, you could see this bounce up here. We need to get above this range and into the other liquidity pools though. And yeah, that's where we stand. Let's go a little bit back. We're gonna take a step back and do the bullish trend-based fib extension level, because we can do that now. So what you can do with that is you can just say, okay, let's just take our trend-based fib extension level, which you can get from your fib retracement tools over here, and favorite that. And then you can basically go from the impulse to the retrace, which is to here. If you hold this 236 level, which also coincides with the 786 for the bearish fib level, if you hold 27371, like if we manage to get above 27371 and hold it, then you can expect upside paths to occur to this region of 27900, or the resistance of these zones up here at 27697, 27658, 27752. These kind of regions will meet with possible resistance, but basically this could be your little mini bullish trend-based fib extension level as you start to dig a path out of this range, if we can get above this level. Okay, so currently you're getting the 5 time frames overbought. It's not the ideal entry. The ideal entry would have been the kiss to the cloud that we outlined for you yesterday down here, with the thinning of the cloud on the hourly and seeing yourself out there. So if you're still in the trade and stop loss into profit and wondering about it, then this is what you would be doing to monitor the trade, and you can move your stop loss to each level as they start to reclaim these. And I've done that in the past as well. They're quite handy to do that. All right, so I just wanted to show you while Bitcoin was going sideways a little bit of yesterday what happened in NASDAQ, which was really, really crazy. So yesterday I was playing I had the day off, so I was playing the London Open 2, and we caught this bottom here at the 618 bounce, and it really shot up crazily. You know, it's only 0.89%, but one of these ticks is like a ridiculous amount of money. So this is was a crazy move to the upside here, and it's quite volatile. So if you're ever thinking about doing something outside of crypto, there are links in the description to get funded for stocks. We've got a growing number of traders within the Discord for Momentum Master, increasing their output with that, and I'm in the process of getting that done as well as I learn this new asset and how it trades. but it does trade off of TA. It does seem chaotic, but it does actually honor levels quite nicely. But you have to be in the very micro time frames to deal with it, because the point spreads are very, very volatile. So we're getting the hourly cross down event here on the hourly as well. So this looks like it has closed. So these are things you cannot ignore, let's say. If you do get a cross down event, you could see some downside occur. But if you get the push up of this above that, I have seen them negate cross ups when it's extremely bullish, and this immediately pushes up out of it. So you need to see if this holds this 236/786 level of the bearish fib level. So if we go back to the 12-hour time frame, you'll see this coincides with the 786 of the bearish fib level. So what do I expect and project? Well, I think that based off of the technical analysis and the liquidity pools on the monthly and the 7-day and the minute chart, that you could go a little bit higher up into these regions of the 27.6 or 27.7 region, and then make your decision based off of the fatigues at that point, whether it will continue or not. But we have to ultimately see how New York will hold it. Based off my historical evidence about Asia playing into London and New York, I would say that New York sends it up into these regions somewhere. I would be surprised if they did not. Let's just put it that way. So despite the cloud and the cross down events, I would be surprised if they don't continue to send it further. The thickness of this cloud as well also suggests it's real, as opposed to this thickness. This thickness, it's very similar to this one, I suppose. So you could get a little bit more surge up. Yeah. So the thickness of the cloud, this is a volume weighted Heikin-Ashi formula that takes into account the volume, which is why it thins and thickens. So the thickness of this cloud on the hourly suggests it's not going to fade here just yet. You have reclaimed the hourly adaptive, so you'll at least see some meandering around here for another 5-6 hours if it doesn't do anything. If it doesn't do anything during the I'd be surprised if it doesn't do anything over the New York session. New York is volatile, so there should be some moves coming in the next 2 hours. I would look for the London handoff. When is the London handoff? Well, in my time, it's 11:30, which would be 2 hours from now, just about. It's right here at the London close. So this is when you see this volatile shift. And you go back in history, these times are when it starts to pump or dump or do something like here. So this London close zone of handoff to New York is where you start to see something. So when we start to see that occur in 2 hours is where you'll start to see some volatility enter. And that's my story, and I'm sticking to it, folks. Short but sweet. I hope it was worth your time. It was worth my time to spend with you. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same and not waste a second of your time and bring the fire, the precision, the accuracy, and all that fun stuff, and keep it fresh and real every time. So we'll catch you on the flip side and see you in the charts. Peace.